Hi, I'm Peter Rose, founder of Longwood Currency Trading. Surviving on the Forex field of battle. What's that all about? The Forex market, as you well know, because you're a trader, is the largest financial market in the world, bar none. $6.7 trillion a day of volume. This is in 2025. Dwarfs on a daily basis the volumes of all the U.S. stock markets. It's huge. And therein lies its two dichotomies. One is its complexity, infinitely complex zero-sum game. And yet, on the other hand, its simplicity, which I define from my experience in physics and mathematics, in that from a state of total complexity and total disorder comes a state of order. The problem is perhaps we're not looking at that field of battle in the correct manner. I look at the Forex market as a field of battle. I've got 58 years, something like that, in the martial arts right now. I've taught thousands of people karate and self-defense. And so I think in terms of conflict and dealing in issues of physical confrontation, which are created by emotional reasons. I mean, you just don't all of a sudden go, I think I'm going to punch this guy or I'm going to rob him. There has to be some emotional conflict, either within the individual or in the contact that individual will have with somebody else. It just pisses him off and away you go. Regardless, when you start throwing hands, it's too late to worry about the training. It's too late to worry about why it's happening. You just have to get it done. When I look at the currency markets, I have to look at them as a field of battle, as conflict. I'm not creating any animosity, and the market is not creating animosity at me. So where is the conflict? Because we know there is conflict. I think the conflict comes from our ill-preparedness to deal with that field of battle. We don't have the right equipment. We don't have the right training. We're not prepared for the actions of the enemy in physical conflict or in financial conflict. It's interesting, for those of you who are movie buffs, if you saw the Oliver Stone movie Platoon, which was a conflict of a physical nature and death by bullets, contrasted with his later movie Wall Street, which was death by finance, by money. Both were equally valid conflicts and battles. Both are battles that must be fought in one form or for one reason or another. And so if you're not prepared for physical conflict and combat, you're not going to win. You're not going to survive. If you're not prepared for financial combat, you're not going to win, and your bank is not going to survive. And when you go broke, you affect your life and the lives of those people that depend upon you. Going broke in the financial markets is your fault for your reasons. Going broke in defense of your country with your death is something that has to be done. So you choose to go into combat in the financial markets. So you have no one to blame but yourself for your own unpreparedness or unwillingness to face the facts. So I'm going to give you some facts that are contrary to everything that you have seen in people talking about trading, and particularly in the Forex market. I'll preface this by saying that I've been looking at the financial markets since the mid to late 1970s. I traded stock options for 4 years, which means I had a preliminary education and study in stocks itself. I studied commodities from a theoretical standpoint and wrote computer simulations against that. I ran into the currency markets, the FX market, in 2007. I have spent 40 years, I had a 40-year career in real estate, and I was a software engineer for 33 years. So when I bumped in 2007 to the FOREX market, I started studying that and writing computer simulation models against it from an academic standpoint, because I was already involved in software engineer, and in real estate, and I wasn't interested in doing Forex trading. But with a degree in physics and almost a minor in math, and being a software engineer solving problems and stuff, I mean, I just ate that shit up. I just thought it was the greatest thing to come along. And so I studied the Forex market from 2007 until 2012, when I thought, well, I'll just try trading this. And so I funded a couple of $1,000 mini account, and I lost that pretty quickly. I thought, oh, well, it's like, I'll try that again. Another couple of $1,000, gone. Maybe I don't have enough education. And so from 2012 until 2017, I got more education. I watched the videos. I read hundreds of books. I studied. I traded in demo that entire time. I was a fucking wizard. I was making 9 to 15% a month for months on end in demo. So in 2017, I thought I had it all knocked down. I had my rules all written out, and I followed all this shit and the indicators and all the other crap that you're familiar with. And I immediately lost in about 4 months. I funded my account with $45,000. And within 4.5 months, $40,000 was lost. How did that happen? Have you prepared for your trading the way I have prepared for mine? Do you have even close to the amount of time in dealing with the financial markets that I did? And yet I did no better than probably what you're able to do. So the question is, are you stupid? I know I'm not stupid, and I know you're not stupid. So why are you not achieving the success that you want to achieve? First of all, what is that success? I teach in my consulting work and in my fast-track training program, in a 6-week period of time, how to develop the information and the skills that will enable you to replace, if not significantly impact, the replacement of your job income. That's what you're working for. That's who comes to me to study. Not to trade at 500 to 1 leverage on a $1,000 account and turn that into $20,000. And they don't go behind the scenes and follow you because maybe you're able to do that. But then because of the way that you have to trade in order to do that, and because of the high leverage, you lose it all. Does anybody know how many people are losing all that money? Yes, we do, because the statistics don't change. Many years ago, there was a study done by a major Forex broker. Over 25,000 of their clients, 43 million transactions that came out with the stunning statistics that 90% of the traders lost 90% of their money in 90 days. And of more significance is that of those traders, the 90% who lost all their money, they were 72% win rates on their trading. How can you lose all of your money when you're 72% winners? Because you're stupid? Are you stupid? Am I stupid? No. Well, what does it boil down to? It boils down to the education that you're consuming. So now I can go on my rant based on the information that you now have as to what's causing the failure is the education. And let me tell you what that education that we're studying consists of. The stupidest of them all is Fibonacci. Don't even think about it. Fibonacci, I'm a physicist. I did the math behind Fibonacci's. I've used them. I understand them. They're for tree rings and the growth of rabbit populations, not fucking financial markets. There is absolutely no fucking correlation between a Fibonacci level and a currency level, a stock level, or whatever level. None. The fact that you get touch points on that is immaterial. You've got the 50%, the 68%, the 70%, the 25%. I don't know how many percentages there are because I haven't paid any attention to them because they don't make any sense. It's absolutely random that those are used as touch points. And anybody that teaches Fibonacci's, anybody that teaches you to look at Fibonacci's is doing you a disservice. That's the biggest help that I can provide for you right now, is to tell you that if you are even thinking about Fibonacci's, you are doomed to failure. Could you use Fibonacci's as confluence to some other indicator? Sure, but that brings up the next question. All the indicators are on past action. So to use any indicator for entry analysis is beyond not only comprehension, but it totally flies in the fact of the mathematics behind all this shit. Bank traders do not use technicals. They don't use technical analysis, and they don't use indicators. Why? Ask yourself that. Those are some of the most bright people in the world that are faced off against each other in a $6.7 trillion a day market. You think they're going to use something that is not of value to them? It's not of value. In fact, for the students that I work with, I refer them a book written by a former bank trader who says, when I quit bank trading and went out to trade on my own, and looking at what was available out there, they're talking about all these indicators and stuff. And I said, what the fuck are all these indicators? What is this? This doesn't make any sense. I'm going to win big in this retail market because people are using stupid shit. So that's out. Indicators, technical analysis, gone. For entry analysis. Does some of that stuff, is it applicable for later on during the position management phase of your work? Remember, if you've watched other videos of mine, I teach the life cycle of a currency position, which is my rip against my 33-year career as a software engineer using the software development life cycle, the SDLC, which is a complex process, a methodology to solve complex computer applications problems. And I took that rip off of that and created the life cycle of a currency position with 3 phases: entry analysis, position management, exit methodology. I know, I talk about that in every video. Geez, it must be important. Who else is talking about that? Who else is talking about writing one rule for each phase, and those rules are condition-based in sequential order? Who's talking about that? No, you'd rather talk about the short MA crossing the long MA, or the elongated candle pattern, or the fucking RSI, or all this other horseshit that doesn't work and doesn't make any sense. I teach principles of trading in what I call a process-oriented manner. Principles used to build processes in an oriented manner. Process-oriented trading, not technicals. Now you're going to say, oh, but Peter, we got to use fundamentals because the bank traders use fundamentals. That's what they do use. But what the people that are teaching you Forex trading aren't telling you is that bank traders trade for totally different purposes than we do as retail traders. The bank traders need to have fundamental analysis to an extreme degree because the bank traders are trading and executing orders for their clients. If they're going to be advising a client to buy Swissy, then they better have an extraordinary amount of fundamental analysis behind them in order to make sure that not only are they doing the right thing, but their client understands that doing that is the right thing and at the right time because of that fundamental analysis. Do you have a PhD in economics? Do you have a PhD in psychology? Do you have a mathematics background to the extent that you're a rocket scientist doing complex, high-order partial differential equations? No, you don't. But they have roomfuls of these guys. The banks do. And so the bank trader understands what's going on in the different countries from the fundamental stuff that's going on. They understand from a theoretical basis from an economic standpoint level how each little tick in the interest rate of one country is going to affect the interest rate in another country, and where the divergences are, and when it's going to be a good time to buy and how much to buy and all the other crap that goes with it. You can't compete with that. So fundamental analysis is out. So look, we're looking at the field of battle, and you're looking at all this fundamental analysis, and you're looking at this technical analysis, and you're looking at all this psychology and all this other stuff. You're being deluded. What are you going to do? You're going to let your broker teach you? Why would you trust your broker? Every time you make a trade, the broker gets a cut of that on the spread. And because they know 90% of you are going to fail just because of your own stupidity, the broker is not an ECN broker. They're going to take the other side of your trade. So if you go long, you're selling it to them. They're holding your trade because they know they've got a 90% chance it's going to be a loser. So why don't they hold it? And if you lose it during the course of the day, that's fine. They rake that money. So they get the spread and they get your money. If you're successful and you're going to still hold that trade, you're still holding the other side of that. Then at the end of the day, when you aggregate all of your money together and you're big enough, now you can go into the interbank market and use an ECN connection and throw all that stuff off into the interbank market. So who are you playing with? If you don't even know who the enemy is, you don't know what the problem is that you're trying to solve. This is understanding the field of battle. If you do not understand the field of battle the way that I'm describing it to you, please send me an email so that we can start a conversation on this stuff, because it's something that you need to be aware of. Now, I'm not going to teach you in an email, and I can't do that in a video conference, which I'm willing to have with you at no charge, to at least point you in the right direction. I can't take on a lot of people to take my fast track course because I'm retired and I'm enjoying life. I'm sitting out here in the middle of the day on a Saturday, enjoying myself, and I'm going to go in and they're going to have a cup of coffee and have lunch. I don't have 14 people I've got to do consulting with on phone calls. I don't have group chats that I have to deal with and harvest people together. I don't have time for that, and I don't have patience for people who just want to watch the video screen and get the magic secret sauce. I am an educator, a professional educator. I've taught martial arts for over 50 years. I know how to teach important stuff. I went to college and got a technical degree. I know the importance of properly structured education. And I wouldn't have been able to get that Bachelor of Science degree in physics if all I would have been told to do is read the books. I needed a teacher. I needed a mentor that I could ask questions to in real time as I was experiencing the problems. That's the educational process that I present in the Fast Track course. And it only takes 6 weeks of your time, but it takes all of my time that I'm willing to devote to it. So just a few people at a time that become friends. Because what we're trying to do is show you how to develop the skills to significantly impact the replacement of your job income. Look, if you've got a $60,000 a year job, wouldn't it be nice to make 10%, $6,000 a year? Is your boss going to give you a $6,000 raise? Is he going to give you a $6,000 bonus? Oh, I don't think so. Is he going to do that every year? If you have an account large enough to generate even a 20% return from to throw off $6,000, what is that? A $30,000 account will throw off $6,000 if you make 20% on your money. Jesus, if you can't make 20% on your money trading currencies after taking your course with me, you've wasted your time. You're just then you are too stupid. Because I know how to teach, and the course is laid out in very simple terms. Anybody can do this, but you have to have the desire to trade the currency market because you love to trade currencies, not because you just want to make money. If you just want to make money, go get a fucking job. That's how you make money. You're not going to learn how to make money by trading because you're not interested in trading. You're only interested in making money. First, you have to be interested in trading, and then you can learn how to make money. And that's why I filter out 90% of the people that contact me because they're looking for the magic pill. There is no magic pill. There are secrets, and those secrets are encapsulated within the life cycle of a currency position, of entry analysis, position management, and exit methodology. The rules that comprise each one of those phases, one rule for each phase, 2 to 4 conditions, simple conditions that must be met in order to satisfy that rule that either give you a bid-ask signal event or tell you to go get another cup of coffee. It's pretty simple. And it's simple because there's no technical analysis. There's no fundamental analysis. There's no heebie-jeebie Fibonacci's. There's no, it's Tuesdays and the shaman is telling you to go long, pound dollar. It isn't that way. It's you in your familiarity with, number one, the field of battle of the Forex market, the field of the Forex battlefield. You understand what that battlefield is. That's a simple thing. You learn that in probably the first week. Well, you learn enough of it right here in this video. I should just show you how to solve the problem in the course. I'm just telling you what the problem is here. I don't have time to tell you how to do it. If I did, I would. But because it's going to take me time to do that, it has to be done in a course. You have to be willing to do that. Why wouldn't you invest whatever amount of money that it takes in order for you to make a 10% against your current income? Because your boss isn't going to give you that. But I'm saying not to get into the currency market unless you feel you can make 20% against your bank. If you can't make 20% against your bank, you failed. What are you going to do? You're going to make 10% a year? Why don't you go in and buy a Vanguard index fund? You'll get 8 to 12% depending on the year. Long-term, 20-year period of time, 8%. Vanguard. Buy fucking real estate like I had and compound that over 10 or 20-year periods of time. You're getting 20, 25% on your money. I bought a building in the 80s for $73,000. And I sold that building for, let's see, it's $600,000 and change. I think it's $603,000 or something like that, $604,000. From $73,000 to $604,000. And I picked up the cash along the way from rental income. So I spent the cash with the Disney World, with the family, and had steaks. But when somebody handed me a check for $600,000, I put that in the bank. That's what you're trying to learn how to do. That's what's possible for you to do. And you don't do that with a 20% return in the Forex market. You do it with 40% to 80% returns on your money. And maybe even, I can show you the math and the methodology for 120% returns at 10 to 1 leverage, not 500 to 1, because you have to have risk management in it. Jesus, if I can show you how to do it at 10 to 1, think of what you could do if you get skillful and then you begin to apply that higher leverage into your trading. You make 200, 300, 500 times, 5 times the amount of money. So your potential is unlimited as long as you're willing to invest the time and the money to learn the skills. If you don't want to invest the time, just watch my videos and be entertained, because that's what all I can tell you that these videos are providing for you is entertainment. I'm not showing you or telling you to do anything. But if you are serious about this and you want to learn the skills about how to significantly impact the replacement of your job income until you can get a bank large enough that will replace your job income and then some, that's a whole other thing. Send me an email so we can get into conversation with that, maybe have a video conference and see if you qualify for fast track. Or maybe you just got a problem. You said, Peter, I can't seem to solve this entry problem. I'm using fibs and all this other crap. I could solve that for you maybe, just in a phone conference. And I'm happy to do that for no charge. Because maybe I can't work with, maybe I'm too busy at that time to even take you on as a fast track student. So if I can help you and you've got the experience in trading, what I tell you to do will make sense. You know, I get a lot of people that do contact me. And I try to help them. And you know what? A fucker's never even bothered to return my call. Oh, hey, thanks a lot for that. That worked. Or call me back and say, hey, that didn't work. I've had some people call me back and say, hey, I've tried that, but I'm lacking something here. And so I work with them. I'm willing to work with that. But you don't even have the courtesy to call me back after I send you my free document, the 7 steps to success in Forex trading. You can't even take the time to write me an email back and say, hey, I read this thing, it's a piece of shit, and I don't think you got on straight. Or to send it back and say, no, it didn't make any sense to me. What else can you tell me? Or geez, you're talking about things that you did and experienced, and those are the things that I'm experiencing too, and that helped me look at what I'm doing differently. If you understand the value of education, then you understand that you really don't know the field of battle of the Forex market. So let's get a conversation going and see if I can help you solve some simple problem that you have. If not, we'll talk about the fast track course and see if that makes any sense to you. If it doesn't make any sense to you, I'm not going to try to sell it to you. I do not sell anything. I have nothing to sell you. I have something that you can buy if you choose to do that. But I'm not going to say, okay, Bob, get out your credit card, and if you do it today, I'm going to discount the price by 10%. No fucking way. I don't discount shit. That's the price is because you get the value out of it. How do you replace your job income? I'm going to discount that? I don't think so. So you got to be really serious, because I only want to deal with serious people. Because I only have friends that are serious about the work that they do, the activities that they do, the way they interact with their families, and how they conduct themselves in life. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.